Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The yen erases losses after tumbling past another psychological milestone for the first time since 1990 as intervention nerves fuel volatility. This as markets brace for a hawkish tilt when the Fed meets this week. US Secretary of State Antony Blinken will step up efforts today to secure a truce in Gaza during meetings in the Middle East as Israeli forces continue to prepare for a possible attack on Rafah. Plus, Elon Musk making an unannounced trip to China on a mission to reverse Tesla's revenue decline as the US automaker announces a partnership with Baidu for self-driving approval. It is also, of course, a big week on the earnings front, and lines crossing right now from Philips, of course, the healthcare equipment maker based and listed in the Netherlands. And this is the redhead. Less about the earnings story, more about this agreement and the challenges they faced around the safety of some of their kit, particularly the sleep apnea devices that they sell into the US. And the redhead is this: the Philips reaching a $1.1 billion early settlement in the sleep apnea case. That is a redhead for Philips on that question mark, of course, that has lingered for this company. And it is coming in below that settlement number than many of the estimates. So $1.1 billion is the early settlement in that sleep apnea case in the US for Philips. Again, a number that comes in below many of the estimates. We continue to look out for details as well, of course, in terms of the order outlook and whether or not they're going to stick to their guidance for the year. They have reached a €540 million pact, meanwhile, with insurers in the Respironics case. So drawing a line under some of the issues they face. First quarter sales, by the way, coming in slightly below the estimates. A soft miss, €4.14 billion. The estimates have been for $4.1 billion. So a bit of a miss on the first quarter earnings front on the sales picture. But again, drawing a line, it seems, around some of the challenges they face when it comes to the safety of some of their devices. We're going to be speaking to the CEO of Philips, Roy Jakobs, later in the show. That's at 6:40 a.m. Do not miss that interview. Let's check in on these markets then, of course, with the lens firmly, again, on the Japanese yen, given this extreme volatility that we've seen. As we said, crossing through that 160 level before the rally that we've seen just in the last few hours. What an about turn just in 3 hours. Again, as markets continue to be on intervention watch, the Fed's decision, of course, is going to be consequential, the language we get from Jay Powell. But again, worth reminding viewers, of course, that Japan is on a holiday today, so liquidity is thin. You're looking, in terms of the futures, European stock futures, gains of around 0.4% after the US market put in its best week in 2024 last week, of course, powered by the earnings coming through from the tech giants. European futures looking to build on that, up 0.4%. Another big week, of course, in terms of banks, healthcare and autos in terms of the earnings story for Europe. FTSE 100 futures pointing to gains of 0.5%. We keep across, of course, the moves around copper and iron ore. Oil is a little softer today. S&P futures pointing to gains of 0.2%, building on the upside of last week. Nasdaq futures looking to add 62 points. Let's flip the board cross-asset and check in on the yen because the moves, again, have been dramatic. Currently, you're looking at 155.42. So the strength there coming through after breaking back through that 160 level. We continue to break down this story for you in the detail across this show. Euro dollar, by the way, at 107. We look ahead to Spanish CPI data. Currently a bit of strength coming through for the single currency, up 0.3%. Brent at $88 a barrel, 67, down almost a full 1 percentage point. And the geopolitics of the Middle East, of course, with Blinken in that region once again. Copper back above 10,000, up 0.5%. Let's cross over now to Avril Hong, who's standing by in Singapore for a check on the Asian markets. Avril.
Yeah, Tom, the focus is quite squarely on the Japanese currency. So let's talk about the stocks before I take you there, because we are also seeing a run-up in Asian equities. Of course, Japan closed today. And this is thanks in large part to what we got from the positive handover last Friday. Investors are choosing to focus on being optimistic and the positive sentiment coming through from those tech earnings, but also the monthly PCE data, which allayed some of the concerns after a string of those upside surprises. So we're seeing that recovery in the Asia Pacific today. But what I wanted to highlight as well is what we're seeing on the Hong Kong stocks. The Hang Seng climbing nearly 20% from its most recent lows in January, meeting the possibly that technical definition of a bull market. But remember, it is coming against a very low base. But a couple of things to highlight on what we're seeing on Hong Kong stocks and this recovery that we've been seeing is how corporate resilience, those earnings have been coming through. Today, specifically, what we're seeing in the movers is the Chinese lenders. We have the mega banks reporting shortly, but flip the board because it's also due to what we're seeing on the property sector, especially after a major developer said that it has reached a solution with bondholders on its liquidity issue. So that's helping to allay some of the concerns about the real estate sector, which of course is responsible for a lot of what we're seeing in the Chinese stock market. So the gauge of them surging by the most since 2022 at one point. But let's flip the board. I want to take a closer look at the Japanese currency, walk you through what we saw in the past 12 hours or so. It was that breach above 160 on dollar yen, and this is of course exacerbated by the thin liquidity today. So perhaps not that surprising. We're seeing these huge price swings that pop above 160 might also have reminded some traders to reduce their yen exposure. But here we're moving back towards that 155 level, as you well know, Tom.
Avril Hong in Singapore with a market check there out of that region. Thank you, Avril. We stay, of course, on the yen story. I had to pinch myself when I looked at the moves there. 2% higher now versus the US dollar after breaking through that 160 level. On the detail then, the analysis, let's bring in Bloomberg's M Live strategist, Mark Cranfield. Mark, what is going on?
We've had a bit of everything today. As Avril was saying, there are huge swings. And it really got much more exciting after we touched 160 earlier today in Asia. So, of course, all the movements are probably being exaggerated a bit because Tokyo is off on holiday. But getting to that point of 160, probably for some major traders was probably enough. They've probably been sitting on positions for some time, earning their profits against the US dollar and probably saying, OK, that's good enough for me. And we probably saw some start to cash in from that point. Since then, things have got really skittish, and there's rumours going around that the Japanese authorities have already intervened. They've been checking rates. None of it has been confirmed. But on a day when people are already starting to see a bit of dollar selling and the market is a little bit less liquid than usual, and you've got the Fed meeting coming up this week, throwing those things together, and there's no wonder that traders are saying, well, I don't want to stick around and see the details. I just want to get rid of some of my positions and cash in what's left of my profits here. So it's certainly the kind of day where we've seen huge swings in Asia and the Europeans are only just getting started now. I suspect they're going to be in for just as a busy day as we were in Asia here.
OK, a wild ride so far for the yen once again today. And as you say, we're looking ahead to that Fed decision. Of course, that ties in to the potential moves around this Japanese currency. On the yield story in the US, across the Treasury curve, Mark, how much sensitivity is there to a Jay Powell that cements in a pivot towards a more hawkish Fed?
Certainly there'll be a reaction, particularly in the Treasury market, because traders haven't yet completely given up on the idea that the Federal Reserve will cut at least once this year, probably in the fourth quarter. I mean, they've already scaled back a long way, but they haven't completely ruled out the possibility that the Fed will be able to do that. Now, if Jerome Powell leans a bit more hawkishly than people are expecting, and he's certainly got some reasons to do so because the inflation data just last week was a little bit hotter than he would have wanted to see. Obviously, the employment situation is very strong, so the data is not supporting the case for the Federal Reserve to cut rates at all, and time is running out. So we've got this overhang here with the Fed dot plots still talking about 3 cuts. That looks pretty unrealistic. Almost certainly they're going to need to tweak that when they meet in June. So here we are with time not on his side. He's got to be realistic about it, and he may even have to give a hint that, well, I really don't see any reason for us to move in the near term. He certainly has been saying he can take his time. Well, taking his time might be until 2025. And if the bond hit market hears that, there's probably room for treasuries to sell off a bit more.
OK, really an interesting analysis. We lead up, of course, to that meeting, that decision from the Fed. And, of course, investors will be queuing in or tuning in very closely, of course, to what we hear from Jay Powell, as Mark was outlining for us. Bloomberg M Live strategist Mark Cranfield setting us up in terms of the analysis around the yen and the preview of the Fed. Thank you. Let's switch to a big corporate story then. And this was a surprise coming through from Elon Musk in China on this unannounced trip. The Tesla CEO seeking approval for a driver assistance software that could could help with Tesla's revenue decline. We heard from Musk in Beijing. Take a listen.
It's good to see electric vehicles making progress in China. All cars will be electric in the future.
OK, Musk in China then. Let's bring in Bloomberg's Jill Desus in Hong Kong. Jill, Musk says it as a surprise, as we say. What is he trying to accomplish exactly?
Well, Tom, it seems like it's all about Tesla, this surprise trip. I actually found it particularly, catching us off guard just because what we had been preparing for just about a week ago was a visit by Elon Musk to India, where he was expected to meet potentially with Prime Minister Modi. That, of course, he had postponed, saying he actually had some very heavy Tesla obligations. Not sure how much that's related, but now here he is in Beijing. He actually met with Premier Li Qiang, who was working as the top Communist Party official in Shanghai when Elon Musk just a few years ago put together that deal for the Tesla Gigafactory. It's critical, most important global production plant. Now it seems like what Elon Musk is ultimately trying to accomplish here is making some headway on getting full self-driving, what Tesla calls full self-driving. It's sort of the semi-autonomous driving functionality within Tesla cars approved in China. That's obviously been a pretty weighty obstacle for Tesla to ultimately get over, just because there's a lot of technology concerns, but also national security concerns. But it certainly seems like that is what Elon Musk is in China, trying to clear that hurdle toward getting this Tesla technology in cars there.
And Jill, as part of this trip, we hear that they're deepening their relationship, Tesla, with Baidu, which, of course, it has one of the leading autonomous driving platforms in China. How significant is that partnership to pushing through and pushing past some of these hurdles?
Yes, exactly, Tom. I mean, presuming that partnership goes forward, that seems like that is what would enable Tesla to ultimately accomplish its goals of getting this technology into vehicles in China. So the nature of this deal, obviously still, I think, kind of coming into focus, what exactly happens there. But yes, it does seem like what Tesla would ultimately be able to accomplish is partnering with Baidu to get some of this, sort of self-driving, autonomous technology into cars. Again, I must stress that when it comes to this Tesla technology, what exists already in the United States and elsewhere is something that needs to be constantly sort of self-monitored, but ultimately it does kind of fulfill some of those, semi-autonomous needs. So yes, it does seem like partnering with Baidu on some of this technology, this navigation structure, would ultimately get Tesla to clear a pretty significant hurdle toward entering the market with some of this technology that would enable it to, provide technology that allows it to scale up, an incremental amount of revenue as it's displayed in these cars.
OK, Bloomberg's Jill Desus with the progress, it seems, that is being made by Tesla in that Chinese market on that unannounced visit by Elon Musk. Jill, thank you very much indeed. Coming up, America's top diplomat arriving in Saudi Arabia, to the geopolitics then, to push for a Gaza truce once again as Israel prepares for a possible Rafah attack. More on that ahead. Plus, Philips reaching a settlement in its sleep apnea case. The CEO, Roy Jakobs, will join me later for more on that. The company's latest results broke about 13 minutes ago or so. They have reconfirmed their guidance for the year, but consequential in terms of coming to this settlement. The dollar figure has come through at 1.1 billion. We got more details with the CEO. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US Secretary of State Antony Blinken will step up efforts to secure a truce in Gaza during meetings in the Middle East as Israeli forces continue to prepare for a potential Rafah attack. Blinken is now in Saudi Arabia, where he will meet with regional counterparts and attend the World Economic Forum meeting. Saudi Arabian Finance Minister Mohammed Al-Jadaan spoke at that meeting, calling for de-escalation in Gaza.
It is very, very unfortunate to see loss of lives, wherever that is. Civilian lives are important, whether it is in Ukraine or in Palestine or elsewhere. You need to make sure that you actually de-escalate and do everything we can. In Saudi Arabia, I can tell you, for the last several years, we made it a very clear strategic objective that we de-escalate in the region. The region needs stability.
OK, let's get more then from Bloomberg's Middle East anchor, Germana Bertecci in Riyadh. But Germana, what should we expect then from Bloomberg's, Blinken's, I should say, latest visit to the Middle East? Can he move the dial on this conflict?
Well, that is the big question, Tom. I thought it was interesting to get those comments from the finance minister, Mr. Jadhan, on our panel yesterday, saying that geopolitics is still front and center here, which is why this special political meeting is taking place. Now, we know that the U.S. Secretary of State, Antony Blinken, just landed in Riyadh a short while ago. He will be having some one-to-one meetings. We know he's meeting with the Foreign Affairs Minister of Saudi Arabia, 11:15 local time. He also will be having a fireside chat with the World Economic Forum President, Borja Brende, 12:30 local, 10:30 UK. So save your calendars for that one. Engaging in various one-on-one diplomatic discussions. He's also expected to have a discussion with the leader of the Palestinian Authority, Mahmoud Abbas, who is also here in Riyadh as well. And yesterday, Mahmoud Abbas was quoted as saying that it is only the U.S. who can convince Israel to stop the prospective counteroffensive attack in Rafah. So something to bear in mind there. And of course, the backdrop to these discussions is Gaza is front and center. These talks are about the future of Gaza. The U.S. are coming here to try to implement some form of a truce, of course, come to a deal about the secure exchange of hostages, and ultimately raise questions about the longer-term future of Gaza. Who will be governing Gaza, and what does the reconstruction effort look like? So a tall ask, but it is significant that so many heads of state and diplomatic leaders are here in Riyadh for this conference.
Yeah, indeed. And you've been, of course, attending the World Economic Forum. You've been on the ground, getting a sense of what is top of the agenda, and you outlined some of the key challenging questions there. What have you been hearing then at this event, at this summit in Riyadh?
Yeah, well, I'm going to loop back to that panel that we had at the beginning of the summit yesterday. I moderated a panel with Kristalina Georgieva, the managing director of the IMF, and of course the Saudi finance minister Jadhan, who said that the number one risk right now for the region is, of course, geopolitics. That's not going to come as a surprise to anyone. Their goal is to de-escalate, de-escalate, de-escalate. That is the messaging that we're getting from Saudi Arabia. But of course, more broadly, the same discussions that we've been having the last couple of months. This summit is particularly focused on growth, how to revive growth over the medium term, collaboration, and the big question for the region and for the rest of the world, how the world can work together on an energy transition. We also had a panel with the UAE Energy Minister, Abdel Mazraoui, yesterday. So many different discussions going on here. But I think the takeaway, Tom, is that the feeling is that world growth has done better than expected, despite all of these shocks, the geopolitical shocks that we highlighted. In the medium term, lots of challenges, especially when it comes to productivity, longer term investment, and bringing along lower income countries as well.
OK, Bloomberg's Middle East anchor, Germana Bertecci in Riyadh. Thank you very much indeed, covering, of course, the World Economic Forum and give us the context around these talks on the conflict in Gaza. Let's get back to what's happening with the Japanese yen right now, though, switching focus, because, of course, the volatility is the kind of moves we haven't seen, in fact, since Japan and the Ministry of Finance intervened back in 2022. No sign, no confirmation, of course, that intervention has happened today. We know that liquidity is very thin, of course. We lead up, of course, to the Fed decision, which we know will be consequential for the Japanese yen as well. But given it fell 1.7% on Friday, the moves today have been remarkable. You crossed through 160. It tumbled through 160 earlier today. Now you're seeing the strength coming through for this Japanese yen versus the US dollar, up 1.4%, currently at 156. We keep across this story, of course, for you, again, on a day when it's a national holiday, Japan, and there is thin liquidity. 156 US dollar, Japanese yen. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, BHP is said to be considering making an improved proposal for Anglo American after its $39 billion bid was rejected. Bloomberg understands that the Australian miner is discussing with its advisors a revised proposal in the coming weeks. BHP is also in the process of discussing the merits of a deal with its key shareholders and trying to convince them to back the offer. key to the rationale for this potential takeover, BHP of Anglo American, is, of course, the asset story around copper and the run-up we've seen in prices above 10,000. In fact, a price move that you've seen about 16% year to date. And you're currently looking at copper at still just breaking above that $10,000 per tonne level. And again, on expectations across the industry that demand for copper, so central to the renewable energy story, of course, is going to continue around electric vehicles, around renewable energy more broadly, and that the supply is not yet matching that demand. That is part of the rationale, certainly, for BHP and its attempts to take over Anglo American. As we say, the conversations continue at BHP as to whether or not they will juice that offer. Now, the Democratic Republic of Congo, meanwhile, is questioning Apple over growing concerns about the use of conflict minerals in iPhones and other devices. For that angle on this story, let's bring in Bloomberg's Ondiro Oganga, who joins us from Kigali. Ondiro, what is the bone of contention then in this formal notice against Apple?
DRC is coming off very strong, and they're saying that Apple products such as iPhones and Macs are tainted by the blood of its people because they're sourcing minerals that are smuggled from DRC into Rwanda. And then these minerals are laundered into the global supply chain. As a result, they're losing up to $1 billion annually. And the minerals in question are 3T, tantalum, tungsten, and tin. And Apple is responding to this allegation, saying that since 2016, they've been auditing their supply chain, and they're reasonably confident that blood minerals do not exist in their ecosystem. However, they have their work cut out for them because now consumers are more aware and cautious of sustainability. However, the burden of proof fully lies on DRC.
OK, really interesting as to how Apple grapples with these accusations. Meanwhile, what is the role then? You're there in Kigali. What is the role of Rwanda when it comes to this debate, this row over minerals and the conflict in the DRC?
They've been under a lot of criticism for their support of M23 rebels that have expanded their territory in DRC, particularly in mineral-rich areas. We've seen the U.S. come out, criticize them, telling them to withdraw their troops from DRC, and also their surface-to-air missiles that endanger the life of civilians. Rwanda is not sitting back. They're fighting back. They're saying that they're not going to respond to these baseless allegations and that DRC is working with defectors. But as this blame game continues, 6 million people have been displaced, lives have been lost, and livelihoods continue to be impacted.
Wow, 6 million people displaced. OK, Bloomberg's Ondiro Oganga in Kigali on the consequences of that tension. Thank you very much indeed. And catch African Amplified for more coverage of the continent. This Friday's edition puts South Africa's upcoming election under the microscope. A really consequential election, of course, where the ruling party may face one of its biggest challenges since, of course, the end of apartheid. So that's Africa Amplified. Note that down in your calendars and check in and tune in. Talking of checks, let's bring you up to speed on what the moves and how the moves are shaping up around the Japanese yen. We continue, of course, to be on intervention watch. And in fact, the strengthening that we've seen just in the last couple of hours or so around the Japanese yen after it tumbled and fell through 160. Well, that move back to the upside has been quite substantial. 156 right now for the Japanese yen versus the US dollar. It fell, the currency, 1.7%. It ended 1.7% lower on the close Friday. Then it broke through 160 at the start of the session today before reversing some of that. Of course, it is a holiday in Japan, so liquidity is very thin indeed. 156.34 on the Japanese yen. Coming up, Pedro Sanchez over in Spain, expected to announce today whether he is resigning as the country's Prime Minister. We're going to get the view from Federico Santi, the senior analyst for Europe at Eurasia Group next. What does the PM do? Will he call elections? The consequences for the politics and the economy of Spain. That is coming up. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. The yen extends gains after tumbling past another psychological milestone for the first time since 1990. As intervention nerves fuel volatility. This as markets brace for a hawkish tilt when the Fed meets this week. US Secretary of State Antony Blinken will step up efforts today to secure a truce in Gaza during meetings in the Middle East. That's as Israeli forces continue to prepare for a possible attack on Rafah. Plus, Elon Musk making an unannounced trip to China on a mission to reverse Tesla's revenue decline as the US automaker announces a partnership with Baidu for self-driving approval. Let's check in on these markets then. It was the best week for US stocks since the start of 2024. Will the earnings story continue to propel the momentum around US stocks, or will concern about a hawkish Fed put a roadblock in the way? European futures pointed to gains of 0.4%. It's a big week, of course, for European earnings as well. We've got banks, we've got the health sector, we've got the automakers as well. Currently, though, looking to build on the gains of last week, up 0.4% in the session. That's what's flagged, at least. FTSE 100 here in the UK, pointing above 8,200, looking to add 41 points. S&P futures looking to build on the gains of last week, looking higher by 0.3%. NASDAQ futures also looking to add 68 points, pointing higher by 0.4%. We'll see if Tesla gets a lift from that announcement around a deeper partnership with Baidu. Let's flip the board. Cross-asset, of course, we continue to zero in on the Japanese yen, where, wow, it's been a wild day for this currency. 156.28 after, again, earlier today, it happened today, it broke through 160, tumbled through 160, and then, of course, you had the moves higher. What was behind that? We continue to unpack and decode that for you. But now you're seeing strength right now for the Japanese currency of around 1.6%, almost making up for the drop that we saw on Friday. 155.58 right now for the Japanese currency. Euro dollar, meanwhile, gaining 0.3%. We're going to get Spanish CPI inflation data out later today, and then a build out of that inflation story through this week when it comes to Europe. 107 on the single currency. $88 a barrel on Brent, down 0.9%. Of course, continuing to monitor the events in the Middle East. And copper holding above that 10,000 level. Further gains in the session today for that metal, up 0.6%. Let's cross over now to Avril Hong, standing by in Singapore. And Avril has the yen story for us. Avril, what's going on?
Yeah, Tom, let's unpack what we're seeing on dollar yen. I mean, just a couple of months ago, we actually saw it hovering below that 150 level. After the BOJ hike for the first time in 17 years, somehow it manages to send dollar yen higher. A couple of weeks ago, we were looking at dollar-yen intervention line descent potentially at 152. Last Friday, we were talking about something like 157, 158. That weakness coming through despite what we got on the BOJ holding rates. It really was a dovish hold. That was the read by the market. Today, just setting the scene further, we saw that pop above that 160 level. And some have pointed the finger at fat fingers, but I think what that move has also highlighted is maybe traders are reminded they want to reduce their yen exposure, those intervention jitters coming back to the fore. And indeed, as you well highlighted there, we're seeing the yen move back down towards that 155 level against the greenback. But flip the board is not just dollar yen that is moving lower. We are also seeing that recovery against the euro, the pound, the Swiss franc as well. This is against the backdrop of that data that's coming out as well. But it has always been about the yield gap, as you well know, Tom. And it is in a week where we are bracing potentially for more hawkish Fed rhetoric after a string of upside surprises. Now let's flip the board again, because not just about the levels that we're watching, it's also about the volatility. You well know that what we're seeing today is exacerbated by the market closure, thinner liquidity. But if you take a look at the implied vols, is near the highest level that we've seen this year. The highest was last Thursday. That was before the BOJ decision. So this shows us that traders are really bracing for huge swings in the yen tomorrow as well, Tom.
Avril Hong in Singapore. Yeah, this story isn't going anywhere, is it? Arguably one of the men of the moment right now, one of the people of the moment at least, is Kanda over in Japan. The currency chief, Masato Kanda, speaking in Tokyo, saying he has no comment when asked about these FX moves. Consequential, of course, player in this whole debate. Avril, thank you very much indeed. We keep across this story for you. Let's switch focus from Japan to Spain now, where we are expecting to find out in Spain whether the Spanish Prime Minister, Pedro Sanchez, will resign. His deliberations on staying in power come as a court launched an inquiry targeting Sanchez's wife for alleged influence peddling. Very pleased to say I'm joined now by Federico Santi, the senior analyst for Europe at Eurasia Group. Federico, thanks for joining us. There's a number of options then at the Spanish Prime Minister's disposal when he seeks to make clear his next move. What do you expect that move to be? Does he call an election? Is it a no confidence vote? Does he step down? What do you think ultimately he ends up deciding to do?
Well, yeah, a very unexpected development last week, which has thrown the political class in Spain into a frenzy of speculation. First off, I would note that the accusations against the Prime Minister's wife are not particularly substantiated. They're mostly based on press reports. They were brought by an association with a history of politically motivated lawsuits with no new concrete evidence behind them, and they may not even lead to prosecution. Now, on that backdrop, I think a decision to resign could be seen as something of an overreaction on the part of Sanchez. Lots of reasons why he may be doing this. This could really be just of a personal nature. There could be more to the allegations that meets the eye that we just don't know about. There's also a lot of speculation that he may be eyeing a top job at the European Union, with the European Parliament elections just around the corner. I think he would be a very strong contender for European Council president in particular. So I'm saying he may be looking for a way out at a time when his position had become increasingly difficult. Let's not forget that Sanchez presides over a minority government that relies on no less than 6 other parties to pass legislation, and indeed had been having a very difficult time getting even basic legislation through Parliament, starting with the budget. But the more cynical but perhaps more plausible explanation is that he may just be looking for a way to rally support and rally his allies behind him ahead of important regional elections in Catalonia next month, and, as I said, European Parliament elections in June. As you said, a few options on the table now. No one really knows about him, I think, at this point. But he could simply, go on as if nothing had happened, although that seems unlikely after making all this, song and dance, if I may say. He could resign and anoint a successor, though it's unclear who could really step into that role. He could call early elections, as you mentioned. That's certainly, within his prerogatives, but that would be very risky, given
Federico,
that the opposition has a strong lead in the polls.
Yeah, and on that point, you and the team at Eurasia Group have actually raised the probability of a potential election being called. We know, of course, Sanchez is someone who is relatively comfortable taking a gamble, political gamble, and he may do so again. Maybe this is part of the gamble. But you've raised the odds of a potential election in Spain this year.
We have, I think, just out of the sheer uncertainty that we have in Spain at the moment. And certainly wouldn't be out of character, as you mentioned, for Sanchez. I think he's done this time and time again, taking big risks that have usually tended to pay off. In the current context, though, as I said, the opposition has a solid lead, so it would look really risky for him. I would, caution against reading too much into the polls at this point. He's proven time and time again that he can turn around a difficult situation and sort of recover in the last few weeks of a campaign. But still, that would be a huge gamble for him at this point. A more sensible option, perhaps, would be to simply call a vote of confidence on himself, knowing he would probably win it at this point, as a way to, first of all, force his allies to, make a show of loyalty towards the government, and also just to strengthen his position and get a fresh mandate from Parliament. But time will tell.
Federico, you outlined for us in really great detail the kind of political challenges and the uncertainty, frankly, within Spain right now when it comes to the political future. What is that doing to the economy of the country, to investor appetite? Is this putting off the investor flows into Spain? How is it impacting the economic prospects for the country?
Yeah, that's the key question, really. And it's actually remarkable how little Spanish assets have been affected by the political uncertainty. And this has actually been the story throughout for many months and indeed years. Despite the chronic political uncertainty that we're seeing in the country, the economy has continued to do well. And I think that's the main reason. So long as the economy continues to sort of hum along, investors have been willing to pretty much look through all of the political uncertainty and the political risks here. Spain was relatively less affected by the energy crisis and the inflation shock compared to the rest of Europe. The economy is performing better than many of its peers. So I like to think that will remain the case. Now, the longer the political uncertainty goes on, the more problematic it is for the economy. And I think we'll start seeing this having more of an effect. I mentioned already that the budget bill has already been delayed. Another key concern we have is relating to the disbursement of EU funds, of which Spain is a major beneficiary. This is a key driver of economic growth. It started well, but already Spain is sort of falling behind schedule. And without having a fully functioning government in place, that will only get worse, particularly in the event of an early election, of course.
And just briefly, before we let you go, Federico, and look, you put the caveats around the poll numbers, but as you say, the Popular Party, the Conservatives are leading in the polls. If we end up in a situation where they end up in government in the near future in Spain, how does the policy agenda change domestically and internationally for Spain?
Yeah, that is the working assumption, just based on the polls. As I said, I would take them with a big grain of salt, but that's also, I think, part of the reason why we haven't seen more of an impact on the economy so far. I think even in the event of early election and the onset of a more conservative government led by the Popular Party, I don't think we would see a huge sea change in terms of economic policy. Of course, there would be differences on energy policy, fiscal policy, welfare, etc. But by and large, in terms of Spain's position in the EU, fiscal discipline, the outlook for fiscal policy reforms, the inflow of EU funds, I don't think that would change fundamentally. Even having the far-right party Vox involved in government, which is undoubtedly a reason for uncertainty, I don't think that would contribute much to raising the political risks around this, which is again one reason why I think people have been more willing to look through the political uncertainty than elsewhere, or than was the case with Spain just up until a few years ago.
OK, Federico Santi, thank you very much indeed. Senior analyst for Europe at Eurasia Group, with the context, of course, and what we're seeing around Spain, that decision from the Spanish Prime Minister Pedro Sanchez expected later today. Coming up, I'm going to be speaking to the CEO of Philips, Roy Jakobs, about the company's latest results and, importantly as well, the settlement that they've come to in a key US sleep apnea case. That is just ahead. This is Bloomberg. Welcome back. Now, Philips will book provisions of more than $1 billion to settle claims filed in US courts relating to a sleep apnea device recall. For more on that and the company's latest earnings, very pleased to say I'm joined by the CEO of the company, Roy Jakobs. Roy, thanks for your time. Let's start with that settlement then. The number $1.1 billion US dollars, coming in well below some of the estimates that came through from our team and others. Does that settlement prevent future personal injury claims? To what extent does it draw a line around this?
Yeah, I think two important parts of news today from Philips. Firstly, on operational results, we announced that we had a start in line with our plan, which meant that we showed growth, we had strong margin improvement, and order intake outside of China turning positive, in particular in our strong market in North America, which was very important. Secondly, as you call out, a number of very key milestones achieved in the quarter on resolving the Respironics recall. We got a court approval on our economic loss settlement. We got court approval on the consent decree. We also got a settlement agreement with the insurers for an income of more than 500 million. And then most importantly, we got to resolution of the personal injury and medical monitoring case in the US, to end the uncertainty that was relating to that and to get actually the vast majority of the issues behind us so that we can fully focus on the business. And therefore, we also reiterated with confidence our outlook for the year of 3 to 5% sales growth, margin improvement to 11 to 11.5% adjusted EBITDA. And we slightly upped our cash guidance for the year to 900 million to 1.1 billion.
Roy, let me push you, though. Does the settlement prevent future personal injury claims?
So it was important that actually this resolves the full US litigation case. So actually we have reached an agreement that actually covers all the claims in the US, even the ones that would come in still over the next 6 months. So therefore, this actually puts behind us the vast majority of the claims because those were in the US. That doesn't mean that everything is resolved. We, for example, still have the DOJ also investigating us, but that actually is now one of the last remaining pieces of the whole suite of actions that we have taken in resolving the recall. We have now, for the patients, remediated all devices, And as I said before, we also reached agreement around consent decree and the economic loss and now the personal injury and medical monitoring. And that allows us to focus back on where we need to focus.
And you mentioned the Department of Justice investigation. Can you give us an update on that, Roy? How is that unfolding? What are you provisioning for that?
We cannot provision because actually that investigation is ongoing. We cannot also not speculate on the outcome. So DOJ is investigating. We are fully collaborating, and actually that will be ongoing. But as we have now resolved the vast majority of the other cases, actually what we are focused on is really driving innovation for healthcare. Because as we all know, healthcare is under big strain. Not a lot of people, a lot of patients to be served. And therefore, our AI-driven solutions really are in demand to actually serve that market and actually address the shortages of staff, but also to address more patients with better care.
Yeah, and I want to get onto that market question, certainly. But before I do, the total cost, so Bloomberg have calculated the total costs around this recall, the apnea recall, sleep apnea recall, is around $5 billion US. To be clear, you do expect additional costs to be added to that number. There's more that you're going to have to be putting aside for this.
At this point in time, we are not aware of anything else that we need to put aside for this. So what we have put aside and what we actually have been coming out with today, that's actually something we are covering. Of course, there are also still ongoing investigations, as we just discussed the DOJ, but it's unknown what if there will be any consequences from that. Importantly, what we said, and also when I came out with the plan, we said we need to bring back to Philips where it belongs, with sales growth, operational margin improvement, and cash improvement. We actually delivered all three of that last year, and also this year with our full year outlook. We are strengthening also our operational cash profile. And therefore, even if there would be more coming, we are confident that we actually can pay out of our own operational cash flow for any of the outstanding issues that might be there. First of all, we remain focused on growing the rest of Philips to its full strength because Respironics is important and we're also rebuilding that business. But it's 1 billion out of 18 billion. And actually the vast majority currently where we are focusing on is the other businesses, monitoring, imaging, interventional, but also the consumer business. And that actually is gaining momentum, that's gaining strength, and actually makes Philips more meaningful in addressing the challenges in the healthcare segment and also serving our consumers.
When do you see the Chinese market turning around, Roy?
So the Chinese market still has its challenges. I was there actually last month. I was also talking to the government, to the vice president. I was encouraged to see that actually they launched a new subsidy program for the healthcare market, where they're actually subsidizing hospitals to replace their aged equipment. We expect that will support gradual strengthening of that market. We're also active in the consumer segment. We see that actually sellout is starting to increase a bit. So we expect actually towards the second half of the market that the Chinese market will strengthen. Therefore, it's also so important for us to get the growth out of the rest of the world. And therefore, we were very encouraged to see that strong start in North America, but also in other parts like in Indonesia, other parts of Asia. We see the Middle East coming up and even Europe showing some stronger growth that we are tapping.
And just to be clear, we've got very little time left, but you expect that turnaround, you expect strength in the Chinese market in the second half, just to make sure I got that accurate.
Yes, that's
in the second half.
That's currently our best estimate of what's happening, and we stay very close to that market.
Roy Jakobs, really appreciate your time. The CEO of Philips, of course, coming to that resolution, important for that company, 1.1 billion in terms of that settlement around the sleep apnea device, and of course the outlook as well for the broader demand for that business and its devices. Really appreciate your time this morning. Plenty more coming up on Bloomberg. This, of course, is Bloomberg. Welcome back. Now, Europe's major banks are due to report results this week. It will, of course, be a key test for that sector. For more on this and the earnings story this week, let's bring in Tim Craighead, Director of Research for Bloomberg Intelligence. Tim, what is your takeaway so far, midway through these results, as to how these companies have performed?
Yeah, I tell you, Tom, this is an important earnings period from our perspective. We've had a couple of quarters of negative results. We need to see a sign of inflection, especially with interest rates rising and the whole idea about central bank pivots being pushed out. What we've seen so far, with almost 3/4 of market cap having reported, is about equal beat versus miss, which is better than what we had the last couple of quarters. About 3% negative earnings growth, which is a lot better than the significant declines of the last couple of quarters. And actually, if you look at organic growth, 2/3 of the companies are actually exceeding expectations. So that's a big deal.
Tim, who are you most excited about this week then on the earnings front?
Yeah, I tell you, it's pretty interesting. You've got a few tomorrow. You've got Adidas, which is a big turnaround story. Do we continue to see momentum relative to Nike? You've got Volkswagen and Mercedes, which I think are going to be important from the standpoint of a finger on the pulse of China, as well as what's going on with EVs. Couple of big pharma this week. GlaxoSmithKline, which has started to perk up. Stocks up about 20%, but still really lowly valued. And Novo Nordisk, certainly quite critical from the standpoint of what's transpiring with this whole obesity or anti-obesity trend and thesis. So quite a few. Earnings are in banks, you mentioned, are a big deal this week. Net interest margins are quite critical. So, yeah, good stuff.
Tim, briefly, what have been the key drivers for that relative strength that we've seen so far?
Yeah, this is what's really interesting, Tom. You've got volume and pricing that are better than expected for certain consumer staples companies like Danone and Unilever. We've seen better results coming through as well on pricing for some of the chemical companies like BASF. Profit margins, as I mentioned, have come through generally better than expected. I should say net interest margin generally better than expected for the European banks, which has been really notable to see because I think there's been concern about that starting to take a hit. And in industrials, which is clearly important for the region, we've had better backlogs and book-to-bill ratios for a whole swath, whether it be ABB, Schneider, etc.
Okay. Tim Craighead from Bloomberg Intelligence, really fantastic setup for another important week when it comes to the earnings story. Tim, thank you very much indeed. The asset at the moment, though, is, of course, the Japanese yen. You're kind of seeing the volatility, the kind of moves that we haven't seen since intervention actually happened back in 2022. Here's the strength coming through. The strength, yes, the strength for this Japanese currency, at least now, up 1.6% versus the US dollar at 156 after it tumbled through that 160 level. This is the story we continue to unpack for you, of course. It is a holiday in Japan, so there is thin liquidity. That's the context. We bring you more on the yen, the BOJ, as we look ahead to the Fed as well. In markets today, which is next? This is Bloomberg.